We talked about GBPUSD a couple of days ago. We said that the price was creating a double top, and that on its own is super interesting because it would suggest the price could move substantially higher. It could also be a very good entry for a bearish position. Let me explain why I mean by that. But first, let's recap what we're dealing with here. So you have a high here from September. In fact, we spent a couple of days here, and then we hit a high here on April 22nd and April 21st. So what we wanted this to be a bit more defined, because what I have experienced is that if the market just goes all the way up and then breaks, or sometimes goes down, tries to break out, then it doesn't really work. So obviously, if you did trade here, sometimes you just need to take a chance, right? You go for it, use a time stop. Okay, so for example, this is the daily chart. Maybe you buy on the back of this, and then see if we can push to the upside. Now, there's a few reasons here why I would not have bought this. Okay, the reason is that the market usually trends strongly from the morning in Europe until the afternoon in London. So you can actually see here how the market pushed higher from 8 a.m. Madrid time all the way up here, and then the breakout happens at 10 p.m. At 10 p.m., people stop trading and instead, relax. So buying a breakout at the end of the day is usually not a good idea. I would have ignored this altogether. Now, what's the benefit for us of this? Well, the benefit is that we now have a double top, more or less. I know they're not at the same level, these two, but they are roughly at the same levels, which increases the likelihood of success when we have yet another breakout. So what I would look for here is I would add something like that, add a alert on it, and then if we have that breakout, potentially look to go long. For example, on that breakout, on the day, maybe we can get away with 100 pip stop loss. Now, per the actual target on this, we can go substantially higher. We can go to 147.78 possibly. That will give a risk reward ratio of, doing this the wrong way. See if I can get this to work, because I was using the function to go short instead of going long. If we hit that target, your risk to reward ratio is going to be something crazy like 17, and that is for a FX pair. The risk to reward ratios are not that good unless you manage to get in at a very good time, and then the market just keeps on dropping for the rest of the year, which would be the equivalent here. Is it needs to sort of go up higher. But we don't really care if it doesn't go all the way up towards the target. Even if it does, maybe just to these levels, your risk to reward ratio is 5.34. And if it hits the high here, it will be looking at a risk to reward ratio of 10. Now, what's also interesting here is that the longer this builds below, there's also a good opportunity that it fails. So using multiple time frame analysis, the very short-term trend is bullish above 132.35. And if we break below this level, we could easily go back towards the midpoint of this channel. It's a bit like the setup we did in Brent crude oil. You can check that out if you missed that. Had some very good setups there. The main difference, though, is that the big picture here is neutral, whereas Brent crude oil prices was already in a downtrend. So that's why we had like a huge success in Brent crude oil prices. And this is also why it's less likely that we're going to have a huge success here. So with this said, we have the breakout. If it breaks out during London hours and it really moves higher, that's usually a good sign. The alternative, which I don't think is going to happen, but if it could happen, could be a sweep. A sweep is when you have a breakout and then the whole thing collapses on itself. You see it in the price action when people just abandon ship, so to speak, and the whole thing crashes. And then the third option would be just to wait for a break here. What do I prefer? I prefer to keep it simple. I prefer just to go with the breakout. I wouldn't try to short for this to go back into the midpoint. although it is possible and sometimes very profitable, that kind of strategies. But I just prefer to go the breakout, which would mean buy the breakout, give it a couple of hours, not more than the whole day, to move higher. And if it moves higher and I can start to reduce my stop loss, half the job is done. Because if you can start to reduce your stop loss a tiny bit, that removes the most extreme. Because the worst thing is if you get stopped out on the full risk unit, right? A risk unit in this case will be like 100 pips, but in Bitcoin maybe it'd be a 5% or 3% depending on the volatility of the day, right? So when we talk about risk units, ideally we sort of reduce that a little bit. So we go in risking 1 unit of risk, but because we can reduce stop loss orders, we can you know lower it a bit. So now it's zero point 0.8 and then 0.5. And if we always get stopped out at 0.5 on average, because sometimes you'll be stopped out at a full risk unit and sometimes you'll be stopped out at 0.2, then your average is sort of 0.5. If you just manage that bit and then take profits, not necessarily as aggressive, but still like healthy take profits, then what you'll see is that everything is going to sort out itself. You will definitely have more stops out, and you will definitely close out the position earlier because you're applying a time stop. But what's important here is winning, right? Is making money. And this is what this strategy does. It wins money. And I think that's the most crucial thing, rather than, being right and, prove to everybody that we got it right. Okay. That's my take. What's your take? Share your comments below.